Perfect. Okay, perfect, everyone. So just wanted to give you guys the welcoming. My name is Santi. I'm one of the top educators for IML TV, as we can see right here. And today we're gonna go over my trading strategy. How does Santiago Costa trade? So it's actually real simple. I divide my trade in what? Based on the harmonic scanner. So let's go ahead and scan for the harmonic scanner. The harmonic scanner is an indicator that indicates us when to go in and out of the market. So it basically does the analysis for us, right? So right here I have my little entry point. Let me move this over. Let me actually put it bigger. Perfect. So I have an entry point, I have the stop loss, and I have my take profit 1, 2, and 3. So it indicates me when to buy and sell. Perfect. So right here is going to be on 14. What's the first thing that I'm going to do on the harmonic scanner? It's real simple. Real simple. Okay, let me verify we're recording real quick. Yes, we're recording. Perfect. So it's real simple. What I'm gonna do first is I'm gonna grab a line, draw it on the X and on the D. So let me put it black. Let me put it more thicker so you guys can see it. And the same thing on the letter D. Okay, perfect. So watch. If I draw a trend line from this letter X to the letter D, we can all agree that this is an uptrend, right? Why? Why isn't it uptrend? Because the price is going up. So it just makes perfect sense, right? Now, if I do the same thing from this point okay, let me put the RSI on 5. I use it on 5. Why? Because it actually follows the price more closely. Perfect. So check this out. And this is just powerful. If I draw the same trend line from this point on the X on the RSI to this point on the D, we can all agree that this is a downtrend. So what is that called? That is called divergence. This is called divergence, right? When the indicator does the opposite of the actual market price. Okay, so right now I have two confirmations. First confirmation is the harmonic scanner that told me to sell. Why? Why is it a sell? So I have my entry point right here, and I have my take profit. So if the take profit is below the entry, then it's going to be a sell. If it's above the entry, it's going to be a buy. In this case, it's a sell. So this divergence on the top also confirms that it's a sell, right? Now, how does the RSI work? It's very simple. Let me show you guys real quick. So we have a level, which is the 70 level, okay? And we have the 30 level right here. So we have two levels in the harmonics, in the RSI. So in theory, when the price is above the 70 level, which is this red line, it's a good time to sell because it's overbought. The buyers are tired, and the bears are gonna take control of the market. And when it's below the 30 level, it's a good time to buy, to take profit, right? In the terms of being in a sell. So right now I have three confirmations. What's my confirmations? So quick, let's type them in. So my first confirmation is what? Obviously the harmonic scanner. Let me put this a little bit. Perfect. So one is gonna be harmonic scanner. Two is gonna be divergence. Three is gonna be RSI, indicating overbought level. So right now I have what? I have three indicators. I have three confirmations of a sell, right? What's gonna be my fourth confirmation? I'm gonna come down to the USD/JPY. Let me go ahead and refresh the page, and I'm gonna go ahead and draw my support and resistance. Why is the support and resistance very key for my trading? I trade very simple, but it's very key. Why? Because the market, it's all about levels. That's all the market does. It just moves on levels, literally. So what's gonna happen with the levels? Let me go ahead and draw some support and resistance. Obviously, when you open the trading view, it's gonna be in candles. I go to the one on the daily chart, I put it in line, and I go ahead and draw my support and resistance. So let me delete this volume right here. And let's go ahead and draw my support and resistance. What's the support and resistance? It's right here. This is a resistance, and this right here is the support. Why? Because the market came down. This is the floor. When you throw a ball to the floor, it tends to go back up, right? So when it touches the support, boom, it goes back up. When it touches the resistance, it goes back down. And that's all the market does. Okay, so let's go ahead and, I like it in black. Put it in black. And let's go ahead and draw my support and resistance, which is going to be the high points of the market and the low points. I'm not going to waste too much time with doing this because I'm focused more on the key levels, which is around this zone, which is very close to the price. So here I have one. I have right here. We're basically looking for what? For the peaks and the lows. So the price dropped down here, boom, I put one there. The price came up here, boom, I put one there. Okay? So let's go ahead. Now you guys are gonna see so many lines, but in reality it's not that much line. So right here we actually have a what? The price is actually in the support. It's on a resistance. I'm gonna show you guys what's gonna happen in a few. Perfect. Let's go ahead and draw one right here, which is a very key level close to the price, and one right here. Let's go ahead and draw the last one. Okay. Now I'm gonna go ahead and drop down to the 4-hour time frame, which means that if I put this in candles, each little candle is gonna equal to 4 hours. So that means that every 4 hours a new candle opens and closes. So I'm gonna go ahead and put it in line so I can see the market way better. So let's go ahead and draw the support and resistance. Okay. Any support and resistance that I'm missing. So you guys can see the importance of the support and resistance. So in theory, when it's on a resistance, it's a good opportunity for the price to come down. And when it's on a support, it's a good opportunity for the price to come back up, right? So it's real simple. Okay, let's go to the 1 hour. And now on the 1 hour, I'm gonna turn back to what? To candles, Japanese candlesticks. And what can I find in these Japanese candlesticks? Is that, watch, if I draw a line right here, we can find out that the price was what? Real simple. Right here, the scanner told me to sell, right here. That was my sell. I sold and I made like 25, 30 pips. Okay, but why was it a good sell? Because on the previous price, as you can see right here, it acted as a resistance. So what happens with the resistance? Boom. It comes down to support, it comes down to a resistance and goes back down. Boom. Then it broke it, touched the resistance and come back down. So what in past days was a resistance, today it's also a resistance, and that also indicates me a sell. So right now I have one indication of another sell. What's the indication of sell? Real easy. Let's go to the harmonic scanner and let's put it. So the fourth confirmation is what? Support and resistance. So what's the theory? What's the game plan over here? So if the harmonic scanner tells me it's a sell and I find one divergence, I find that the RSI indicates also a sell because it's overbought. I'm expecting the price to be on a resistance level so I can go ahead and sell, right? It just makes perfect sense. This is my 4 points of confirmation. Now, it hit the take profit one. As you can see, the scanner is very, very effective. I entered the sell, boom, it hit the take profit one. Now what's gonna happen? Why did I take profit right here? It's gonna be real, real simple. Check this out. So if I draw a support line right here, it's actually like right here. If I draw a support line right there, and I actually take out my Fibonacci retracement from here, to here, I can see that the 38.2 was my what?
Santi,
Sorry, I didn't hear you.
Yeah, let me go ahead and do that. Okay, perfect. I can find out that one, it retraced to the 38.2, which is a good Fibonacci level to what? To rebound. So that was a good time to take profit. Now, You guys are gonna freak out with this, but it's okay. If I draw the same Fibonacci level from this swing high to the swing low, what can I find out? Let me go ahead and delete the six. Okay, let me put it like more over here. Delete this real quick. I can find out that the what? Let me put this bigger. I can find out that the 61.8 indicated me that the what? That the price can potentially come back down and boom, rebound back up. So I can, that was another way to take profit, and I actually took profit there. Why? Because I knew the market was going to come back up. Now, how many pips did I make with this simple little strategy? I made about 35 pips in a matter of 2-3 hours. In 2 hours. 35 pips in 2 hours. So it's not bad. I came in with a $2 per pip lot, 0.2. So that means that I made $60. Really, really simple. Why? Because I followed my trading rules. What are my trading rules? My trading rule is one harmonic scanner, divergence, RSI, and support and resistance. That's the way that I trade, honestly. It's very simple. So there's a quote that it says, well, in trading, the more simple, the better, right? The more simple, the better. So it's actually amazing to have this little strategy and actually make some money with it. Okay? I mean, there's no excuses. The more simple, the better. So if you guys enjoyed this little strategy, just go ahead and put a 5 in the chat box. Show your love, show your love. Over here to Colombia, right now it's 5 a.m. and there's no excuses to not make money, honestly. So we have a 5, 5, 5, 5. Wow. Zoom is gonna sue me because you guys are killing the chat box. So that's how I trade. Now, what can I recommend you guys? I can recommend you guys that not every trader has the same strategy. I have a friend that's a scalper, maybe a day trader. I have a friend that's a swing trader. So not all the traders trade the same, right? Maybe some like scalping, but I'm teaching you guys how I trade and what's working for me. This works for me. And look, don't get greedy. 20, 30 pips, you're good with 20, 30 pips. Don't go for 100 pips for 200 pips. I mean, unless you're a swing trader. But if you can catch 20 pips a day consistently, you can start pumping up your lot sizes and make more money. But you have to be consistent, getting 10, 20 pips a day. If you can guarantee me 10, 20 pips a day, obviously nothing is guaranteed in the Forex markets. But if you become consistent and manage to get 20 pips a day in profit, you're good. You don't need 100 pips. You don't need 200 pips. With 20 pips, you're fine. 20 pips on a standard lot, it's $200 a day. That's good money, but you have to be consistent. Okay? Okay? You must be consistent. So I'm going to show you guys an example of the importance of support and resistance levels. Because sometimes the price goes up and comes down, boom, and you don't know why it went down. I mean, you don't know. But I know why it comes down. Why? Check this out. So if I draw a horizontal line on this level, let's draw it in red. So as you can see, what did the market do? The market came down, boom, it came back up, it formed a double top, and boom, it dropped. It dropped 400 pips. Oh no, sorry, this is the dollar index. It was on GAUD. Okay, now that I'm on the dollar index, it's no worries. We can analyze another pair. Why did the dollar USD JPY go down? If I go on the 1 hour time frame, check this out. Let's pump this up. Perfect. If I draw a horizontal line from here, what can I see? What can you guys see a pattern? It's real simple. Can you guys see a little pattern in the market? Because I see it perfectly. Okay. The price acted as a what? This line acted as a resistance. It went up, boom, and it went back down. Now, right here on this level is where the dollar yen on the harmonic scanner told me to sell. So watch. If the US dollar versus the yen has to go down is a sell, that means that the dollar, the US dollar has to be weak and the Japanese yen is going to be strong, right? So how can I know when the US dollar is going to be weak? That I expect the US dollar to be on a resistance level so it can come back down, right? What happened with the price? Real simple. The price, boom, it touched the resistance, it came back down. Came back down. It formed a little harmonic pattern right there, as you can see. But the price came up, touched the resistance, so I was expecting it for it to come down, and boom, it came down. So that confirms. So right now I have 5 confirmations of why this is a good trade, and that's simple. The more simple, the better. Okay, so that's another confirmation. It's the key. If you're trading against U.S. dollar pairs, or you're trading U.S. dollar pairs, you have to analyze the U.S. dollar index, the DXY. Why? Because that's going to determine the strength of the currency, if it's going to go up or down. So you guys can have a better idea. If the US dollar comes down, that means that the Euro USD, the Euro versus the US dollar should be going up. As you can see, when the dollar came down, boom, the US dollar came back up. As you can see right here. Real simple, right? So, I mean, this is all about simplicity. The more simple, the better. So let me go ahead and put the GBP AUD so I can show you guys the example of the importance of support and resistance levels on the daily. Okay. If I put this in line and I draw right here. So why did the price come up to this level and boom, it fell? Why did it do that? Let me draw the ellipse right there. Why did the price come up to this resistance and, well, it formed a resistance, but why did it do that? Well, one is because in the past it was a resistance, as you can see right here. Let me go ahead and draw the ellipse. But if I go back to 2014, and this is key, check this out, because so you guys can see that I'm not lying. This is just crazy. Check this out. So as you guys can see, let me put this higher. I draw right here. This same resistance level 4 years ago was a what? In September of 2014, it was a support. So 4 years ago, this level was a support, and today, a couple weeks ago, it was a what? A resistance level. Guys, the market repeats itself. We're not playing games. We just have to have common sense, analyze, check the past. The market repeats itself. So, and that's real simple. That's why the importance of what? Of support and resistance levels. Okay? And that's just real simple. That's how I trade. So how do I trade? Once again, I have right here the harmonic scanner. Okay, so a harmonic scanner told me it's a sell. Perfect. I have divergence indicating a sell. Boom. I have the RSI that's overbought that also indicates a sell. And the price right now, since it's a sell on the harmonic scanner, it's on a resistance level, also indicating me a sell. And what else? The US dollar index also indicates me a sell. I have 5 confirmations. With 5 confirmations, I made 20 pips. It's real simple. 20, 30 pips are good to go. That's all you need, my friend. All you need. Okay, that's all you need. 20, 30 pips a day, and you're good to go. All right, let's check any more trades real quick. Check some trades, the Euro cant. This one, well, it hasn't hit take profit one. I'm actually gonna show you guys a trade that didn't make us money. I think it hit the stop loss. I think it was with AUD USD. So you guys can see that if you guys don't follow my rules, you're gonna lose money. It's real simple. Now I'm not telling you to follow me exactly, but you must follow me. Why? Because I have the results. Let me go to Trader's Way. Which pair was it? It was one that lost. It was the Euro GBP. I'm not sure. Yeah, I'm pretty sure it was this one. Nope, not this one. This one actually hit the take profit. Okay, no, actually it was this one. It hit the stop loss. Why did it hit the stop loss? Real simple. Because it didn't follow my keys. I put a vertical line on the X and on the D. If I put the trend line from the X up to the D, it's a what? It's an uptrend. It's an uptrend, right? If I do the same thing on the other side from here, from this X to the D, it's also an uptrend. So there's no divergence. If there's no divergence in the trade, then I don't take the trade. Honestly, I don't take the trade if there's no divergence. Why? Because it hit the stop loss. But if you have a trade with divergence on the harmonic scatter, you're good to go. So follow my 5 steps, my 5 points of confirmation, and you're gonna be good to go. Okay? So I'm not sure if anybody has any questions, any questions on what they learned today, something you guys want to say. I would appreciate it. So we can get the ball rolling, right? So it's actually been a journey. I have more than 2 years in the industry. Going all in. Obviously, I met the forex market like 3 years ago, 4 years ago. But when I decided to go all in and become an educator for IML, and start the journey of the trade houses, I'm one of the founders of the McAllen Trade House. So we built that community up, and I'm very proud for our team that actually followed that structure of the trade houses, because that's a great opportunity for the individuals to learn directly with a mentor, with a trader that has the results. Okay. So Richard is asking me, please repeat the divergence part. The divergence is very simple, honestly. I'm going to show you right now. What is divergence? Divergence, let me go ahead and show you the USD JPY. Same pair. Sometimes I use the stop loss that the harmonic scanner gives me. For example, all right, so on this trade, let me see what stop loss did I use. So it was 111,790. Let me go ahead and verify the chart. I'll tell you what stop loss I use personally. I usually use the resistance, the closest resistance level. Why? Because I know the market can come back up to resistance, so I put it above the resistance level. So on the harmonic scanner, the stop loss was 111,790. Perfect. So let's go ahead and draw a support line. Go ahead and draw it. Let's get the horizontal line and just put it right here. And let's go ahead and edit this. Put the coordinates 111,790. Enter, boom. So this was on the 1 hour time frame. Exactly. So here they tell me, hello Santiago, you're on point and this is really educative. Awesome. It's the key. Profitability isn't available when it is kept simple and with a strategy. The more simple, the better. All right, so as we can see, let me put this on candlesticks, sorry. We can have a better look at it. So, so right now, the price when it was called, it was like right here. So if I took it to the stop loss, it was about 34 pips, 34 pips stop loss. Now, 34 pips is a lot. What would I do? I would search for the resistance, the closest resistance, which is right here, and I would put it there. A little bit higher, a little bit higher. I'm gonna put it a little bit higher than the previous resistance level. So how many pips would I be risking? So I came in right here. I would be risking 20 to 25 pips instead of risking 30, 35 pips. Look, the key is also the lesser the risk. Look, you guys have to cut out the risk. Okay, I'll go ahead and do that. We need to cut out the risk. We have to minimize risk and maximize profit. So I would put it on the resistance line, the previous resistance, in terms of a sell. If we were a buy, I'd put it below the closest support line, because I know the market. What does the market do? It goes up to the support. It goes down to the support. It goes up to the resistance. So that's what it does. Yes, the screen is shared. Let me go ahead and stop sharing and share again. Okay. Perfect, perfect. Okay, so right now they're asking me, hey, how do you draw support and resistance levels? It's real simple. It's real simple. So I'm going to go to the daily time frame on TradingView. I search my pair, and I go to the daily time frame. Yeah, I'm going to go over the daily time frame, and I'm going to put this in line. Okay, I'm not going to use candle. I'm going to use line. So I put this like this. What am I searching for in the market? Let me delete this volume. Sorry. What am I searching for in the market? What does the market do? I'm basically I'm gonna draw horizontal lines on the peaks, on the highs, and on what? And on the lows. So on the highest point of the market and on the lowest point. And I'm just gonna go keep on doing that on the inside. Boom, I have the highest point, I have the lowest point. Right here I have the highest point. Boom. Right here I have the lowest point. Perfect. Okay, right here I have the highest point. Right here I have the lowest point. I have the highest point right here, and I have the lowest point right here. That's all I'm gonna do till I get to the market price. I have the lowest point right here, and I have the highest point right here. The market tends to follow these patterns of what? Of support and resistance levels. Why? Because that's all the market does. It goes down these support and resistance levels. Okay. I have one right here, and I have one right here. Actually, I have one right here. Actually, so this little resistance is also a resistance on the current market price. This is support and resistance. Okay. What's a support and resistance? This is support and resistance. So resistance is the ceiling and support is the floor. So what's going to happen in theory? So the market is going to do this. The market is right here. It's going up and down, up and down. When the market hits the support, boom, it tends to come back down, please. When it hits the support, when it hits the resistance, it comes back down. When it hits the support, it tends to come back up. So it's like throwing an egg. When you throw an egg to the floor, not an egg, sorry, a ball, a tennis ball, you throw it to the floor, boom, it's gonna rebound back up, right? If you throw it to the ceiling, it's gonna come back down. Now, sometimes the market is gonna do this. It's gonna break the resistance, touch the support. Now, this resistance is gonna become a support and it's gonna come back up. So that's basically support and resistance. Now, I'm gonna do the same thing on all the time frames, right? So I already did this on 1 day. Let's do it on the 4 hour. Well, not that much. We're just going to do it a little bit right here. We have this right here, thing, and we have this previous one right here. Okay, now let's go back down to the 1 hour, and we're going to change it to candlestick. Okay, candlestick. What can I see? If I, okay, let me put this in black so you guys can find out. Okay, when the harmonic scanner told me to sell, it was on this point. Let me put the ellipse real quick. It was on this point. That's where the harmonic scanner told me to what? To sell. Okay? So this is a resistance. Why is a resistance? Because if I go back to the past, I can see that this price right here, this level acted as a resistance. So the price was here. It came down, boom, touched the support, boom, touched the resistance, it came back down fast. Touched the support, boom, and it came back up. So what in the past acted like a resistance, now it's acting like another resistance, which indicates me a sell. So in theory, when it's on a resistance level on the ceiling, it should go down. When it's on the support, it should go up. So if the harmonic scanner is telling me to sell, it's a sell. I expect the price to be on a resistance so it can make sense. That's basically it. Okay, so these are my four, actually, let me put the 5 points. So, and the fifth is only USD pairs. So we're gonna analyze the US dollar index. That's what we're gonna do. This is for only USD pairs. Okay? Perfect. So that's the fifth. What do I mean with analyzing the US dollar index? Real simple. So I'm trading against the dollar, right? The US dollar versus the yen, the Japanese yen. If I search for the US dollar, let me go ahead and search it right here. Now let me just open a new tab and refresh. Okay, perfect. I have the US dollar right here. Perfect, perfect, perfect. That's what I wanted. So I want to find out if I draw a horizontal line on this level. This is where the harmonic scanner told me to sell. So right here at this point, put the ellipse right here. At this point, the harmonic scanner told me to sell. It was a sell. As we can see, if I go back to the past, boom, right here, the price was a resistance. It came, boom, resistance, came back down. It came up, resistance, it dropped back down, it came up, resistance. What does this tell me? There's a pattern that when it hits a resistance, I would expect the price to come back down. So in theory, if I'm trading the US dollar versus the Japanese yen, for the US dollar and the Japanese yen to go down, for it to be a sell, I need the US dollar to go down. So what happened? The US dollar went down, and the USD/JPY also went down. Because why? Because we needed the dollar to get weak in order for the Japanese yen to come down. So it just makes perfect sense, right? And these are my 5 points of confirmation. Look, the more simple, the better, okay? The more simple, the better. That's basically all I can tell you guys. Don't overcomplicate trading. Don't complicate it with, oh, I have 20 indicators, I have 20 lines. No, just look, with these five confirmation points, I made 30 pips in like 2 or 3 hours. That's good. If you can make consistently 20, 30 pips a day, you're good to go. That's all you need, honestly. That's all you need. Okay? That's basically it, my people. So if you guys can be consistent, make 20 pips a day. 20 pips on a $1 lot, that's 20 US dollars. If you can make $20 a day, I'm pretty sure you can start pumping up your lot size. You're eventually going to get to a standard lot. So 20 pips multiplied by a standard lot, which is $10 a pip, that's $200 in a day of profit. And 20 pips is nothing. I see traders that want to catch 100 pips, 200 pips, and that's okay. If you're a swing trader, go for all the pips you want. But honestly, with 20, 30 pips, you're good to go. Now, if you guys compound it, make 3% a day, it's phenomenal, right? So it's all about being consistent, right? Enter all the IM on TV sessions. Watch. Let me go back. Enter all the English sessions. You have to. If you look, this is the best product that we have. The live sessions. Go to the trade houses and trade. Okay, we have Christopher Derrick with the London session. Okay, you have to be on those sessions. Justin Adams trade room. It's gonna be a little bit late for you guys, but do the effort. Put in the effort. It's gonna be 3 a.m. The trade house is amazing. It's gonna be 6 a.m. for you guys. Okay, Leon Davis, 3 a.m. for you guys. It's gonna be 9 a.m. in the morning. You have to jump on these live sessions. Now, if you don't jump on, you click on recordings right here, and what's gonna happen? We're gonna sign in with our username and password of IML. Okay. And what we're gonna be able to see the recordings of the sessions. For example, on my Spanish session, if I go all the way down and click on my name, on my picture, I can see the recording, the replay of my Spanish session, right? So let's let it load and we can actually see it. Let me drop the volume a little bit down because I know I always have music. For some reason, I always have music. But that's the key. The education is the key. Okay, so we have to be consistent with the education. We have to be always trading. Have a little trading strategy, a little trading book. Where what's gonna happen? What's gonna happen with that trading book? You're gonna. Okay, you see, I had music on. What are you guys gonna do with the trading book? You guys are what? You're gonna write down every trade you take. What was the stop loss? What pair was it? And at what time? You have to find out what time you trade better. This is all about emotions. Look, it's not the same trading at 5:30 in the morning, waking up at 3:30. Why? Because the brain is tired and needs to rest. Then trading at maybe 7 p.m. at night. Why? Because you have your Your brain, it's more fresh. Okay, you're active. You can see the market better. This is all about the vision, about handling your emotions. So we need to study the emotions. We have an amazing book called Trading in the Zone. We have to read it. Now, if we don't read it, then we're not gonna dominate those emotions. Okay, and that's basically all I can tell you guys. Let's work on the emotions. Let's work on what? On our little trading strategy. Now, you don't have to follow my strategy 100%, but just take like the best thing that you could have learned of the strategy. If you learned that, wow, I learned how to use the RSI and find divergence, and you want to implement it, go ahead. Look, in this trading, the more confirmations you have, the better. That's about it. The more confirmations, the better. Okay, that's basically it. Simplicity is the key. The more simple, the better. Okay. So, does anybody have any questions? Any questions on the trading? We have three Mr. Albans. Uh, if you want, you can just type it on the chat or just unmute yourselves, and we can I can answer any questions you might have based on my trading strategy. Oh, quick. The RSI. I use the RSI on the five level 5. Okay, length 5. That's my input. I don't use the RSI in 14. I use it at 5. Okay, so let me put it right here. Let me go ahead and put it. I use the RSI 5. Okay, I forgot to tell you that. RSI 5. That's what I do. That's all. That's how I trade. Okay. Well, we still have people jumping in. Awesome. Okay, divergence is very simple. Divergence is very simple. So let me just copy this. I think I can copy it. But let me just scroll it down. So if the X to the D is going up, divergence is when the indicator does the opposite. So if X to the D is going uptrend, then on the other side it has to go downtrend. That's divergence. Now, when this divergence forms in the bottom, on the top, sorry, then it's a sell. When it forms in the bottom, then it's gonna be a what? A buy. So divergence on the top is sell, divergence on the bottom is buy. That's basically it. Okay? Just write that down. Divergence on the top is sell, divergence on the bottom is it makes a big difference. Watch. If I put my divergence on 14, which is the default, look, and I draw my RSI from this point, from the X to the D, there is no divergence. It's still an uptrend, you see? There's no divergence, so I wouldn't have taken this trade, and I would have lost 30 pips. But if I put it in on level 5, from the length, there is divergence, as you can see. It follows the price more closer, and it's something that works for me. Now, you don't have to use it at 5, but it's something that I personally use, and it worked for me. I'm just sharing my knowledge, okay? I'm just sharing my knowledge with you guys. So I use it at 5. Do you take trades in Pacific time frames? Yeah, I like 1 hour time frames. I like 1 hour. I don't really like 15-minute time frames. I prefer 1 hour, 1 hour, 4 hours, or 1 day. That's what I prefer. Okay, any other questions? If not, we can go ahead and pass the mic to Mr. Alban, and let's see what the trade house has to offer. Let's look at some other charts. Yeah, in this trade, I would wait for a pullback to hit the entry point. I wait for it to hit the entry point right here, boom. So I can go ahead, so I can form a double top, and I can go ahead and sell it again. I wouldn't sell right now. It's too early. It's too late. Sorry, I don't like to sell. I would wait for a better pullback and just go ahead and sell it. Yeah, 20 pips a day. That's all you need. 20 pips a day. I use 5 because it follows the price way closer, and it gives me better entries. Early entries better. Okay? It gives me better entries. Just 20 pips a day, superb idea. Yep, just 20 pips a day. 20, 30 pips are good. Okay. So I'm not sure if Mr. Alban is on the line, so I can go ahead and pass you the mic. And yeah, let's take it from there. Let's have somebody else share the screen and let's all look at the markets. Oh, I think I have to mute you guys. I don't know which one is Alban. There's three Albans. Uh,
Don't worry. Okay, that's from. Okay, that's from Douala.
okay, so Alban is the host. Alban, go ahead and mute everybody.
Okay, I just did that. Please, whoever wants to speak can actually speak, can ask, can unmute his or herself to speak, or you can chat on the chat box. It's okay for you to unmute yourself. It is what I personally use. Okay, thank you, sir. Okay, thank you, Mr. Santiago. Thank you for being there for us from 4 a.m. I remember you were still awake not long ago. I don't know when you went to bed and woke up again by 4 a.m. to join us. I think it should be to 6 a.m. now. While we are, this is 5K, this is a.m. there from Colombia. So we appreciate you being present. So now we are happy that we have you from Colombia in the trade house session today. We have Terence and Mirabella from Douala, Cameroon. We have Ndudi, Vivid, Charles, Benga, and others from Abuja Trade House. We have Amos from UK. Amos Don should be the UK Trade House members. Patience is not here. And we have Port Harcourt, Richard, Deborah, Matthew, and others from Port Harcourt, and our Lagos Trade House. All the trade houses are complete as usual, except the Uyo Trade House that are yet to join the teamwork. So for now, we appreciate everybody for coming around. It's now time to share the chat. It's now time to share the chat. So at this point, which trade house is taking up first? Please, you cannot take more than 5 minutes to share your trade idea. Which trade house is taking up first? Can I see on the chat box which trade house is taking up first? Who has a chart? Who has a chart? Which trade house has a chart to share first? Patience is here, sir. Okay. Okay, UK are also at the trade house. So, Mr. Santiago, we have people at different trade houses gathered. Like the Douala Trade House, people are gathered there. The Abuja Trade House, people are gathered there. Lagos Trade House, people are all gathered together. So, apart from the 27 in attendance, we have many other persons in attendance that do not join directly. They rather at the group house level, the trade house level. Okay, which trade house has a chart? Either the chart we had yesterday, I'll make you host, then we continue. Or should I start from here? Yes. I have to stop sharing that screen. Should we start from here? Who has a chart to share, or should we start from this direction? Okay, Lagos, that's a better. Okay, I'll allow you start the sharing of chart first while we are ready to take either 20 pips, 15 pips, 30 pips. You're laughing. Yesterday, I remembered if everybody were to be awake, We had some pips to take from the Euro USD, which we are on. We had some pips to take from we had some pips that should have been more than the 30, 20 pips. And as we speak, we are still expecting this to hit and we go our direction. Wherever it is, we are ready. The driver of the dollar is here. And as you can hear, you analyze the US dollar index and trade all the US dollar pays. So the US dollar index, you can trade as many as possible. That's why we had the US dollar basket. So that is exactly the confirmation. Don't be confused. Everything is super simple. If you keep it simple, it shall remain simple for you. So at this point, let's get the chart from Lagos Traders. Prof. Ebere, please try and use 5 minutes. Thank you, sir. I will regulate your time from here. What do I do? Unmute yourself. And which of the Alban are you? So I can make you host. You can't unmute yourself from there. Let me see what I can do. I'll come next. Okay, Abuja is ready today. Abuja, if you are coming next, please let us know. Which of the Alban are you, Lagos? Let me unmute any Alban I see. Hey, is it you? Let me unmute all the Albans.
Yeah. Thank you.
Okay, you're welcome, sir.
Thank you very much, sir. Good morning, everybody. Our amazing, super amazing upline leader, Santiago Acosta, great revelations this morning. We want to thank you very much. I just want to quickly share a small opinion, something we looked at yesterday, and it's playing out well for us this morning. Since yesterday it has been playing out well, I still want us to keep our eyes very, very open on it. I am talking about a BTC USD. That is a Bitcoin. As we all know, we may not need to go look for who has a Bitcoin wallet to buy Bitcoin and make money from it. We thank God for the charts. Bitcoin is helping us. The MT4 is helping us even milk some money from a Bitcoin. So I'll just go ahead and then share this little screen we looked at yesterday, how a Bitcoin came down to around the 10,000 region. But before doing that, this nice little Gatling pattern on the 4-hour daily and 4-hour time frame. As at this morning, when I opened it up to look at it, it has actually really gone very far. I did, just like Santiago said, when you get your harmonic pattern formed, you also get your support and resistance markups kept down. And something I did yesterday that helped me make my entry played out so very well yesterday evening through this morning. You can see where we marked out the 78.6 retracement for Bitcoin, and then the support zones that I marked out after confirming. Remember, on the chart I shared yesterday, I said the RSI also indicated a clear divergence. So, and then the RSI was below the 20 mark, indicating a very, very strong buy position. What happened to Bitcoin was that it dropped to this third support zone, and from there we made our entry. I made my entry, and then it picked up, and it's still looking good to climbing up. At least if you look at this swing from up to down here, let me just get it out. Good. Now if you look at this swing movement from C to D, this is now our D, where it actually took off from. We have not gotten to the iconic 38.2, which is take profit 1 zone. This is around the $12,354, the 12,000 zone. Bitcoin should be able to get to that point. As we speak now, we are still around 11,200. We may just use the Santiago model now to get some other support zones to anticipate a slight pullback. It just broke the 23 points. I am expecting that if we go to the 1 hour time frame, we'll get a retest. That's exactly what I'm talking about. On the 1 hour time frame, broke that point, the 23.6 point, broke it, tested it. I think if you missed it out from the entry, we may be good to go at the end of this hour. At the end of this hour, if price does not break back down, since it has tested, if it does not show any sign of breaking back down, we can be good to go to entering this and then riding it up to the take profit 1 point, which is the 38.2. Well, if I'm trading the harmonics, I'm always very satisfied with take profit 1. Whatever lot size I want to use, whatever anything I want to do, whatever risk I want to take, I factor everything into the take profit 1. Why? Because on most occasions, the harmonic pattern get to take profit 1, even if it is a counter pattern. When I say counter pattern, I mean a pattern that is countering the trend. Maybe it's a downtrend and the harmonic pattern is showing a buy. At least it will get to the take profit 1 before it continues the downward movement, which is the 38.2 retracement before continuing its downward movement. Euro AUD is still playing out the way we anticipated that it's going to play out. Euro AUD is still giving us our downward movement, still playing out the way we saw that it was going to play out. So if you are in this trade, one other beautiful thing about the Euro AUD is if you are selling it, I have noticed, if you are selling Euro AUD, as I have noticed, you are earning swap, you are not paying swap. In other words, if you are trading Euro AUD as a sell, you are going to be making money also from swap. So let us be patient with this trade as we anticipate that it will get to our marked out destination. This is our marked out destination, and then we'll keep following it. It has not hit the 30 zone yet. It has also not hit this support zone yet. So once it breaks this Fibonacci zone down, we expect it to get to this support zone, and then we can take profit here, or we can still wait for a slight correction upwards, and then we'll follow it ultimately to this point here. Then on the long term, for the swing position, on the long term, let's not forget that this is where we are anticipating to get. This is our D. The B, which is where I said we could take our profit here, is just for the short term. As soon as this point correction is made and then the journey continues downward, remember that D is our ultimate destination. So thank you very much. That is for Euro AUD. BTC, close of this hour, if it doesn't break back up, it has just tested that support zone, 23.6. If it doesn't break it back up at the end of this hour, that's in another 12 minutes time or so, it may be a good point for us to enter and take our trade. You can see this formation here showing us a morning star pattern just down here. Thank you very much, guys. Over to you, my boss. Thank you very much.
Thank you. That's from Lagos Trade House. That's Professor Ibere, the professor of Pitchfork, and he takes Pitchfork. He's a personal person to Steve Grigor, and you know, we are trying to make him come back home to discuss with us in the language of support and resistance, where we understand clearly and as simple as that. Okay, and now let's hand over to, is there any trade call there? I think there was no trade call. It's an old trade, and we are looking at it. What happens to the meeting? Okay, let's make Abuja Trade House, Mr. John Asesia. I did not know the name was a biblical name. It's of recent I knew one of those guys that were taken to from the Jews that were taken to Iraq, and the name were changed. One of the Abednegos, one of the three. That was the original name. So, Mr. Sasia, you are now the host, and you can admit anybody you want to admit. You can remove anybody you want to remove from the room. But please always watch for new persons to admit. You can share your screen from there. I think you can unmute yourself now. Try unmuting yourself. Let's see. As the host, okay, sir. Okay,
yes, sir.
thank you very much. You're welcome. That's Abuja Trade House.
Thank you, my boss.
Other people close to you should mute yourself. What's that? Okay, you are using the Trade House is connected to audio. There should be a mic or a phone that should be muted.
Andy, you're muted.
I think it's better now.
Okay.
What was that? You off the Trade House audio system? It's better.
Yes, sir. Okay. So thank you, my chairman, and thank you, Mr. Santiago. Thank you for your time, and thank you for the privilege, for it's not easy. So straight to business. This is NZD JPY, and this pair have been following this pair for a couple of weeks down to this point in time, and I see it as something that we shouldn't let the opportunity pass us by. I was opportuned to meet this.
Please move your mic closer to your lips, your microphone.
Okay. I was opportuned to, see this trade the day before yesterday's night because I've been following it, but due to busy schedule, I was not able to seize these opportunities because when this high formed, here, notifying here to be a psychological zone because I ran this up to 83.600. Here a high has formed, and like we know already in Forex, history repeats itself. I traced it back to see what has really happened in the past. So I knew for sure that when this high was formed, what we should be looking for is a movement downward. And that was exactly what happened. When this high was formed at 83.600, it was able to push down. And a little consolidation took place. Let me zoom. A consolidation took place here at 81.00, and thereafter it was able to break below, and the movement continued downward to 75.900. It continued again and popped up a swing high to that very previous high, giving us a double top, and we already know what that is. When a double top was formed here, we know that what next we should be looking for is the setup for us to go down. It continued again and was able to move freely because I believe what happened here was there was a fundamental that helped to push this to avoid series of consolidation that would have taken place at this point. So the movement continued, finally giving us a double bottom here at 75.900. 75.900. So I was opportune to enter this trade here just the day before yesterday's night. In fact, I didn't really analyze it. I just woke up and saw it and said, this is a trade to go in. The only thing I did was that I saw it to be at 75.9, and I entered the trade and went to bed, only to wake up yesterday and saw that it was giving me a huge sum of money on the live account that I entered it. So I said that I just have to share it because for a couple of days now I've been busy, trying to breed the new bees in our trade house here. So, and this morning I just took my time to look into the trade critically. I saw that it has, for this movement that popped up here, it has broken this 81.00. And for have broken here, I looked at it that, okay, it may be difficult for it a bit because here I'm on daily time frame. Let's watch to know what will finally happen. If this finally closes above this zone today, then we should be watching out for a continuous move upward or a consolidation at this zone. And while this consolidation is taking place, we should be on the watch to know what next is going to happen. Either a continuous move upward or a consolidation that will finally break below and close below here. So for this candle that is still running now, knowing fully well that we are on daily time frame, we have to wait and know what is going to happen. If it breaks, if it finally come down and close under here and continue downward, retest, then we are good to go down to 75.900, which is this zone. Let me squeeze it so that we will, which is this zone. But if finally this close above here and continue all the drama that is going to take place here, don't forget we need to be patient because patience is the key in this business. This point, this 81.00 and 83.0.60, we just have to be patient and know what next is going to come up. Because for me, I would prefer to go short on this trade than to go long. And going short is only when this movement finally closed below 81.00 that going short will be well confirmed. And it's not just closing, but closing, coming down, retest, and continue downward. And that is why I indicate my trend line in this form that you are seeing it, that here, either of these is going to happen, either this or this. I just know one is going to happen. And if this movement should start coming down from this point, we are looking at nothing less than 440 pips at least. If this movement should continue from 81.00 down to 75.90, we are looking at nothing less than 440 pips. That is you taking your profit even before it hits 75.90. So I think, well, there are plenty of them, but since we don't have much time to share a lot of screens, for today, let's just stick to this. By God's grace, tomorrow we continue. We'll be able to share others because the analysis is still ongoing. And let's also see what to do. Thank you very much, sir. Let's
okay, thank you. Thank you, Mr. Currency. That's what we know you popularly in the currency market. Your audio was very low. Your microphone is actually by your side. It's by their side, yeah. So, and your voice was very low. What he was saying is presenting. I don't know how many people are writing. Me, I'm writing everything. Whoever is teaching me, I write notes. Mr. Austin Godse mentioned that last week, Thursday. Mr. Austin Godse mentioned that last week, Thursday. And I actually picked up my note and showed my note. Bro, you can stop sharing your screen. Mr. Austin Godse mentioned that last week, Thursday, on a session with us. Stop sharing screen is up red button at the top. Okay, thank you. Mr. Austin Gossage mentioned, talked about writing notes. And I remember that at that session, I was writing notes. I still remember that all the sessions we have, I write notes. Whoever is presenting, whoever is teaching, my duty is to write notes because I was taught writing notes is a secret and the key. So I don't mind writing notes at any moment someone is teaching. I have taken note of what Mr. John said, and as a matter of fact, New Zealand JPY is what he analyzed. I want to redo because of the audio that was poor. He presented New Zealand JPY, which I have shared the chart on our on our chat room. His bias is bearish, and he had identified key resistance levels and a support level. To the top, New Zealand JPY daily D1. To the top, current price is about 81.00, a very psychological price. We have he also has 83.60 at the top as per history. Then he's now looking at 75.50 as a support, where his bias is looking down towards hitting 75.50 at any time the market or price wants to go there. He doesn't know the duration. Nobody predicts the markets, but since support and resistance is concerned on a bigger time frame, that means that it is a swing position. With your knowledge of the Fibonacci, with the knowledge Mr. Santiago had given us this morning on identifying support and resistance, that is on the bigger time frame. That information can help a scalper. That information can help an intraday trader. That same information can help anybody. All you need to do is interpret the information given to you to your own trading strategy or personality. You can make it lower, can take it to the smaller time frames, where you would be able to identify other key levels hidden between 8100 and 75.50. And you could actually be playing along towards the bigger picture. And if you also had our Fibonacci lessons, you can also know that inside the capital A, B, C, D, we also have the smaller ABCDs, where you can also play along. I'm talking about intraday, I'm talking about scalpers, I'm talking about other short-term traders, whatever trading personality that fits your strategy. So the bigger picture is that we've gotten bias on New Zealand JPY to the south. Okay, so which other trade house? Support at 75.90. Thank you very much. Let me correct that. I insist on writing. I am writing everything we say on daily basis with the date. Yeah, I can see you are writing too. I can see Madam Kozi is writing. I can see Mr. Bere is not writing. I can see. Okay, I can see. So everybody should be writing notes while we go back to the MT4 to practice. Do we have anything from Douala today? Terence, are you there? You can chat. I will unmute you. You can chat. Do you have anything from Douala? Operation show your notes. Operation show your notes. Yeah, I have to show your notes. At the point, people have to submit their notes. Okay, so let's mute currency. I've muted it, sir. Okay, let's proceed. Let me also look at my chart. It's already 12 noon. We want to allow the trade houses to go back to their chart. Let me also look at what we looked at yesterday. What did we look at yesterday? Okay, yesterday we had time for Euro USD. Yesterday we had time for Euro USD, identifying a key support resistance level on the weekly time frame. We had it that history repeats itself. We had 1.2300 as a historical resistance of 1998. During the global economic recession, it was 1.2300 that rescued us as a support and was also another support. This was 1998. The 2008 economic recession, it was the same level that was a resistance in 1998 that rescued us by 2008. So I think at 10 years intervals, it comes back to that level. And at 2018, we found ourselves here. Whatever will happen, we don't predict the market, but we only take what we see. What we could see is, was that 1.2300 was exactly the resistance price. If you zoom in on your chart, I would love you to have the same chart. Exactly the resistance price, this was 1998. 10 years later, the same price rescued us from the global economic recession. With that 1.2300 former resistance of 10 years ago, 1998, the crash would have continued down. So the 1.2300 being history of 10 years as resistance became the future support and rescued us and gave some cushioning to the crisis that is yet to recover. We are still on the bearish trend since 2008. So this level had always been acting until 2015. We broke out of here after the Swiss National Bank decision against the euro, depegging their currency from euro. We broke down. Now exactly, I think 10 years, am I correct? From 2008, 2018, we are exactly at 1.23. Though we know that this trend line is still attractive to price, though we know that this 1.25 is still attractive to price, but we are very much comfortable with the history we are able to identify. When you know your history, according to Mr. Beres, musician, you know where you come from. So from the history, we are able to know that we are here at the point of history. We may not necessarily want to predict, but we want to act on history. What did we decide yesterday? I'm going to show you what we decided yesterday. But before I do that, let's also check the overall retracement from the 2014 is the most current swing. 2014 May, that was May when we had this for May 2014. May 2014 swing high to January 2017 swing low. To January 2017 swing low. We are able to see that 61.8 is still attractive, but price is still within 50% retracement. About that point, 1.22, 1.2228, and 1.30 being a psychological price, we are still at the zone of 50% retracement. 61.8% retracement is possible, but we are not ready to predict the price. All we decided yesterday, since between 61 and 50% is still a good zone for price to retrace back to. We've seen the history 98.28. We've seen the history. We are fine with that. 61.8 is still possible. But for now, the decision we took yesterday, our decision yesterday was to watch out for this price action, the rejection about taking place here. If it is true, if it's true that this level that was resistance to 1998, that was support 2008, is ready to play this year, 2018. because 28 plus 10 years makes it 18. Yeah, so 10 years later, every 10 years interval. Now, if it is true that this guy would do as it used to do, we count on history, not on predictions. So we were expecting to this week, Friday, 11 p.m., for us to have a possible bearish shooting star. We were expecting to have maybe bearish engulfing is still possible, bearish shooting star. As far as weekly is concerned, the only thing that is possible is must be either a single candle or two candle confirmation. If by Friday, if you are looking for 3 candles formation, it means we need an extra week to confirm. But for now, we were looking to see this candle that has retraced more than 50% to see if it will end the week as a possible bearish shooting star or whatever it may be, bearish formation. That was our decision yesterday. And we shall always hide our stop loss above a psychological level. We hide our stop loss above the price, this resistance. Mr. Santiago had just confirmed that his trading model looks very simple. And each time I discover that my trading model is not simple, I get angry with myself. I always try to see how I could make it very simple. We have a resistance, we've identified history. So now that was the decision yesterday. For the daily, we were expecting yesterday candle to give us an evening star, either bearish engulfing or put it decision, and then with an indecision candle in between two of them, giving us an evening star, which it actually did. So after giving us this setup, whatever pullbacks, but I was looking at this 50% pullback of this while waiting for the dollar index. So whatever happens, I have gotten on Wednesday, we got a confirmation from the daily bearish or evening star is evening star, it's not bearish, or you call it a bearish engulfing. What makes an evening star? Bullish decision candle, bearish decision candle with an indecision candle in between the two confirms it as an evening star. So this is one for daily confirmed. We are waiting for the weekly to confirm. But on the 4-hourly, we got an inside bar, we got an engulfing, we got a rejection of price. It not this level had not allowed price to close above it. We also have a bearish engulfing pattern here. So whatever we've gotten, like one, put 3 together, all these together, 2, 3, 4 confirmations to the bearish at this resistance level. So we are not magicians. We cannot do otherwise. We have to follow the rules. We always sell from resistance. We always buy from support. So being seeing ourselves here, I am comfortable with any stop loss outside 1.2300 or selling here, stop loss about 15 pips above this. So I'm talking about price action at this point. While we do that, for those that are, yesterday night, I remember some people joined us in selling. Perhaps some people started selling here, which they will be on negative now. The important thing is your stop loss is above here. But we have gotten that. By tomorrow, we will check back at night if this has confirmed 1.23 as their senior bros. If they confirm and respect 1.23, we have no option than to respect 1.23 because of the 10 years intervals of history. That is that. And if you see what I did here, whatever comes, I'm ready to go out here at this previous resistance in case of a retest. I'm just looking at being a moderate, maybe 20 pips or 200 pips. You can manage it at that level. So I have not made a trade call on Euro USD. I said yesterday, it's better we remain patient and have the right setup. If we get the right setup, we can be milking 2010 pips, 2010 pips towards the direction of the trend, because the year had just started and prices are at either the psychological resistance level or psychological support level, like the driver of the dollar moving down to 90.00. We will expect to see price break and retest this level before we can change our bias. And this level also, if you check from history, you'll be surprised that it is exactly an opposite of what is happening at Euro USD. The same swing from May to January 2017, May 2014 to January 2017, exactly the opposite of what happens at Euro USD. You can see 50% retracement, you can see 61.8% retracement, but you can also see 90.00 psychological price. For now, here we are. So the same level between 50 and 61.8, or could you say a midpoint between 61.8 and 50% is where the dollar index is. Same thing is where the Euro USD is. We are at point of indecision, waiting for confirmations to see if AB can be equals to CD. We can on the weekly too, here on the dollar index, we expect price to close the week with a bullish setup. With a bullish setup, either the same thing like a bullish bullish shooting star for the weekly, but for the daily, we check. Yesterday we had a bullish engulfing, which is a signal for a buy with stop loss 10 pips below this. Whatever retracement taking place, it could be 50% of this, it could be 61.8% of this, it could be a retest of 90.00. Whatever it is, we shall know by the end of today or tomorrow's candle, where are we heading for the next quarter of the year. But whatever formation we have here should take us for the quarter. Whatever formation we have here should take us for the first quarter of the year, before perhaps FOMC hosts their first press conference and whatever interest rate, whatever will come up. But for now, the formations we have calls for patience, doing the right thing every day, doing the right thing every day, repeatedly. Even if you hit stop loss or you hit take profit, the important thing is always strive to do the right thing always. Don't do otherwise, because you did the right thing yesterday, it did not pay you, does not call for a change of strategy. Don't be flipping your strategies from here today. Stay by support and resistance, stay by price action, follow the harmonic scanner with the goals on your bias, follow it. If you are not sure of what you are seeing, stay out. Any day you feel you are confused about the market, please avoid trading for that day. That is all we have for you. I'm not calling any trade for now because of my US dollar bias position, which I'm still waiting. Pounds JPY, I think this is a nice position, but going by, okay, this is the MT4. I've not added, I have not added the RSI, only to try Mr. Santiago's strategy. So for me, going by my swing strategy, going by my support resistance, bigger time frame, 4 hours minimum, I have not seen a trade to call. I've not seen a trade to call. If you want to trade a 15 minutes, we are not doing bad to sell pounds JPY, whatever strategy. New Zealand JPY USD is still respecting 9300. So this could have been a false breakout because it broke out instead of retesting and we continue as we planned. It now broke in again. So this is a typical example of false breakout. And after breaking in, it has retested. It has retested. So you can see that on the 4 hours, it broke out and broke in, retested. So we are still hanging around here. So whatever happens, we shall be looking at the MT4, the harmonic scanner, the price action, and we will be waiting for this man to give us direction. All those pairs you see waiting are all waiting for this man, the dollar index, to start movement. Immediately the dollar index begins the journey, then we are good to go. I think Stevenson was expecting to sell this, to buy this, and we are also waiting. Whatever formation, either it breaks out retest or break out 9600 retest, then we go for the sell. If not, we will wait patiently. If it keeps breaking out, breaking in, breaking out, breaking in, please know that the magic fingers are involved. At that point, you have to stay out. At least yesterday, Mr. Bere suspected some of such operations. When you see such operations happening, key levels breaking out and breaking in, break out, break in, break out, break in, bullish formation, bearish formation, bullish formation, bearish formation. At that point, it suggests that you stay out. You can use a counter trend line strategy to know when those boys are out of the business. When they're out, either they go on holiday, when they finish mopping and making their money, when they are out, they will allow the market for the technicians, and we shall then go with the market. It's not compulsory you trade every day. It's not compulsory you trade everything. That is the best trading psychology that we have, and that is the only thing one needs to stay successful in the business. So I appreciate all of us. I will want to hand over to Mr. Santiago to end the session for us today and perhaps promise us when we are going to have him back with us and how often we should be expecting to have him with us, because it's been a while he had not been with us. We are still his family, though he's a Spanish educator. He still has Africans like us under his network, and we are speaking English, we speak French, and maybe because of him, we may also have to go and learn how to speak Spanish. So, sir, we hand over back to you. You can end the session for us. Thank you. In case you have any trade call for us, we can take it with you, sir. Hello, Mr. Santiago, are you there? Ooh,
Yes,
this
sir,
is
yes, sir.
about, okay.
Yes, sir.
Okay, sir. Are you free to end the session for us? To conclude the session for us?
I'll just go ahead and finish it. We'll schedule another day and we can go longer.
Okay.
6:30.
Okay. Thank you very much. See you another day. We are always here Mondays to Fridays, 10 a.m. to 12 noon. Any day you are free, you can join us. Outside this session, you can still fix a training session, a classroom session for your team here in Africa. Hopefully we'll have you in Africa soon, and we are happy to have you. Please house, we are 25 now. I want all of us to come with at least 2 for the 9:30 p.m. call with Mr. David Imonitie. 9:30 p.m. call with Mr. David Imonitie. The link had been promoted since yesterday. Get the link, put up your write-up, invite your prospect. Training for insiders, and it will be very useful to the prospect with Mr. David Imonitie. Nigeria National Convention. I don't know how many Cameroonians are joining us at the convention next week at Abuja. Tickets are on sale. Tickets are sold at team basis. I asked my team in Abuja, I asked my team in Lagos, I asked my team in Port Harcourt, everywhere, how many tickets do you need? VIP or regular? We should get them before the date. You may not have the tickets if you don't get it through the leadership of your team. So the tickets are on sale. National Convention 26th and 27th. We are going to host Mr. David Monitier. He promised to come with his wife, and we are expecting the CEO of iMarket Live in Nigeria by May. The planning is on, and we will conclude on the planning very soon. So please stay by your harmonic pattern scanner, stay by your swipe trade app, stay by your TV session, live TV sessions, stay by all the product of IML, follow the instructions accordingly. And for me, it's a waiting week. We already exhausted our risks for the week on the UO declaration account. We don't want to add any risks there. If there's need for risk addition, we shall inform you at the chat room. So for now, thank you. Trade houses continue with your activities for the day. Whoever needs me, I'll be available partially today. Yesterday, I was available almost 24 hours. And today, I promise to be around. So thank you, UK Trade House, Mr. Moss, Patience, Mr. Don. I celebrate all of you from UK. I celebrate the Douala Trade House, Madam Mirabel, Terence. I believe Dr. Tambo is there. I believe a lot of other persons. I can't see their faces are there. I celebrate all of you. I celebrate Abuja Trade House. I celebrate the Lagos Trade House. Mr. Bere, I can see Pastor Martins. I can see a lot of hands from Lagos Trade House. I celebrate Jasesia John. I celebrate Charles Ndudi and the blackest man in Abuja, Henry Ebuka. I celebrate all of you. I believe we meet tomorrow. Perhaps if our setups clicks today, we get it done tomorrow. Thank you very much. PIP is our business. Team building is our business. Get your prospects ready to join us by 9:30 p.m. tonight with Chairman 250, Mr. David Monitier. Bye-bye from here.